And in terms of the agenda today, we want to start with a brief, I think, 101 on what the Canton network is, why we think it's systemically important, and who's using it, and why, and some of the technology behind it. Then we'll talk about some news and developments on the network. There has been lots happening, and we'll cover that with Rajesh. Anton's going to be telling us a little bit about Talos and the work they're doing. And then we will move to the infomercial bit, where we will talk to you about what Launch Nodes does on Canton in terms of enabling customers to be multi-tenant validator nodes, and how that works, and the difference between a full validator and a multi-tenant validator. And then we'll move to talk about the tokenomics of Canton, which I think is a really important part of the innovation of what Canton have done, and try and give an analogy that allows us to explore that, and then move to a Q&A. So kicking off the 101, why is Canton important? Well, Canton is the only public blockchain with institutional grade privacy. And why that's important is that it allows financial services workflows to come on chain in a way that hasn't been possible before. And it has been focused on financial institutions. And despite only being live for a short period of time on mainnet, the adoption patterns are significant and extraordinary. And it's built for compliance and privacy and this idea of legal finality. In terms of who's using it, well, in addition to some of these household financial institutions, there are 400 other institutions who aren't listed who are using it. And there are also companies like BP and Microsoft in other sectors who are leveraging this privacy first and institutional grade control to build and make it a network for more than simply finance. What is the Canton network? The Canton network is, as I've discussed, privacy enabling, but the enabling tool behind that and language behind that is DAML, and Canton have spent a number of years building that, and it's been built by some of the best brains in business. And what it enables you to do is build applications with this application level control and data control that means institutions that couldn't use blockchain and build apps before are now able to. The engine of the Canton network is this synchronizer, and this diagram is complicated but important, and there's a link here that I think someone will share in the chat that explains this in detail. They're incredible resources, and what the synchronizer architecture allows for is almost a network of networks expressed in applications where privacy and access is controlled, and so is data. What's been built on Canton so far? Big repo platforms, important fixed income platforms, and bridges and wallets, and all the kinds of things you might expect with a finance focused chain. But I think it's expanding, and it won't be finance focused exclusively forever. And we're already seeing healthcare applications, we're already seeing sports and entertainment applications. And again, going back to that idea of a systemically important layer one, I think we see that for the adoption of other industries and participants. So as I said earlier, the adoption statistics are impressive, terrifying. We're Brits, so we should try and avoid hyperbole, but they're really incredible. And one of the things here that I think is worth focusing on is this T+0 piece, because instant settlement has been a holy grail in financial services and banking for a long time. And Canton gives you that by default. And the savings and efficiencies that are created in that are enormous. And that's exciting for everyone who's involved right now, but everyone who's going to be involved, and for what's being built in the future. That's the 101 over broadly. Momentum is building. The network is growing by all metrics. The number of validators, the number of new applications that are coming online, and the featured apps as well. And there is now an exchange listed which hopefully Rajesh and Anton will talk a little bit more about. So that's that bit over. Rajesh, to news and developments in the network.
Fantastic. Thanks, Jaydeep, and thank you everyone for joining. I think we've got a good array of people from around the world. When we started doing this, we were a little bit concerned, will there be enough to talk about around news on the Canton network? But one of the things that is very true is that every week there are some major new enterprises joining, new people becoming super validators, new products. So we're never short of news, actually, and the channels on LinkedIn and Twitter, etc., are always very buoyant with new activity. We talked about perpetuals listing last week on 4 exchanges, I believe, then, and this week we saw go live of Canton Coin listings on multiple different exchanges globally, and that's phenomenal. And not just because, not from a speculation perspective, but actually because it introduces Canton Coin to a whole range of other people who wouldn't necessarily have known about it or been able to access it before. And it also provides an off-ramp for folks who are kind of on the network already. So we've seen a lot of interest in Canton Coin since the listings. People are kind of asking, what is this network all about? It's been described as the biggest blockchain network you've never heard of because it's been in stealth mode for so long, and in the last year it's absolutely flourished. So we as a technology company don't speculate on price or anything else. We know that the view is that it's kind of undervalued, but we're just grateful that there's more exposure and more access to Canton Coin, because it means a lot more venues and a lot more individuals and businesses can get involved in Canton Coin, which is phenomenal. A few other things have moved forward this week. So Jay mentioned Talos, and we're very fortunate to have Anton here today. Talos was announced this week as the latest super validator on the Canton network, and I'll share a little bit more later on around what super validators are all about and their role in the network. But that's, we're always very pleased to see new super validators coming on board with different infrastructure and different utility that they've brought to Canton. The other big news story from a couple of days ago was Franklin Templeton's digital assets platform called Benji connecting and integrating with Canton. So Benji has something like $900 million worth of tokenized assets. It's now accessible and tradable from Canton. So again, all of these bridges, all of these integrations mean more and more utility, more and more scope for interesting use cases and interesting trading opportunities for folks within the Canton ecosystem. And last week, if you were on the call, we featured a couple of applications which we thought were pretty interesting. This week, there have been 14 featured apps which have just been told, you've been waiting around for a while to be approved. Why don't you have kind of probationary featured app status? And we'd love to see you on mainnet and see your applications in use. So a couple that we've picked out are Zorro Wallet, and we've seen loads of questions around how do we get a wallet on Canton. Loop isn't seemingly issuing out invitations at the moment. Should we use a Bron wallet? And there's a rich kind of ecosystem now of different wallets available. Canton Bot is another one that caught our eye. So it's essentially a Canton Coin faucet, which means if you're developing on Canton and you want some test Canton Coin, you can go to the faucet and say, give me some Canton Coin that I can use in my testing processes, which is useful. And then the final one we wanted to touch on was Handle Pay. So this is a pretty interesting application where if you've got a social media account, like a WhatsApp account, you can send Canton Coin payments to other people purely using their WhatsApp details. So avoiding the traditional pre-laggy interfaces of having to add in a long address for a wallet or other things. Handle Pay is kind of designed to take the pain away from that. So again, lots happening. We're just seeing a continuous kind of news feed coming through of new partnerships, new bridges, new integrations, which is phenomenal. And if you look at other L1s like Ethereum or Solana, yes, things change all the time and there are new things happening, but we haven't seen anything like the frenzy of activity and great progress that we're seeing in Canton at the moment. The final piece really isn't specifically about CC Boost, but this was an application which went live last weekend, and the premise is if you send 2 Canton coin to CC Boost, it will send you back 4 Canton coin. If you send it 4 Canton coin, it would send you back 8 Canton coin. So a pretty compelling application, almost a victim of its own success. So word got out on Twitter, on Telegram and Twitter, people wanted to get involved, traffic's absolutely spiked, and the developers had to take it down just because it was so popular and so heavy on the network. And it's led to, in addition to other applications that have preceded it, a lot of conversations around how do Canton reward activities on the network, and what types of applications should get special status, and what types of applications should get rewards for transactions. So, and I see a message in the chat saying you still can't sign up on CC Boost. You absolutely can't. They're kind of taking it down for now. So we're seeing a lot of interesting debate about how should app developers be rewarded on Canton, and that drives, you know, the economics of the whole network. And I'll touch on some of this a bit later on, where I try and explain why Canton's very different from Bitcoin and Solana when it comes to kind of network economics and tokenomics. Let me hand back to you, JD, and hopefully we can get Anton on screen and on mic to chat.
Anton, are you there?
I'm here. Hey guys.
Fantastic. Thank you, Anton, for joining. First off, I suppose would be great to get a little bit about your background, Anton, and how you joined Talos.
Sure. Yeah. And thanks for having me. Super excited to be here. It's funny, the slide you flashed with the users of Canton Coin Network. 2 of those are my ex-employers. So started off my career in TradFi, as a lot of people here did. I was at Deutsche Bank for about 13 years and then moved on to JP Morgan. And then made a switch over to crypto in 2022 or so. So fairly late in the cycle. Started working at a small cryptocurrency broker as a product manager on trading, and then have since been at Talos for about 3 years. So that's essentially my journey. I'm a product manager at Talos, focusing mainly on post-trade and DeFi, and has been fortunate enough to work and launch our super validator on the Canton network.
Great. Well, that leads into my second question, which is that many people here today won't necessarily know about what Talos does for institutions. Could you tell us a little bit about that?
Yeah, absolutely. So Talos is the sales pitch is we're a digital asset trading platform, but I think that's a little bit outdated because we do so much more than that. So Talos started in 2018 as essentially an OMS. So idea was to help institutional clients trade in a more effective manner. Right. So at that point, liquidity was very scattered. Obviously, you had different prices, and you still do today. Not just there's less disconnect now, but back then there's so many liquidity providers all streaming different prices. And Talos's goal was to normalize all of that for our clients and allow them to more effectively get liquidity from the markets. Over the years, we've sort of we've added on the end caps of that equation. So now we power the full end-to-end cycle of digital asset trading. So now we have a pre-trade product, so allowing clients to determine what they should trade. Obviously, our execution layer is still the bread and butter of Talos. We have connectivity to 90+ venues, and these are exchanges, LPs, custodians, DeFi, even. So again, we are still very focused on actually allowing clients to get liquidity from the markets. And then we have a very strong post-trade offering now, which I cover, and I lead that vertical. But that's essentially allowing clients to manage their assets and manage the operational and portfolio levels once the trade has actually been made. So again, in my mind, I sort of split it between pre-trade, trade execution, and then post-trade. And then Talos is across all of those. And over the summer, we acquired a company called Coinmetrics, which gave us, that was the last missing piece to our equation, and that's data. So now we have, on-chain data, yeah, I think at this point we're sort of the full end-to-end solution for institutions to engage with.
And Anton, could you tell us a little bit about Talos's view on why Canton's important and what you're doing on it? And also, I overused the word systemically important, but I'd be really interested in your view on that in terms of Canton.
Yeah, I was doing a lot of nodding on the previous slides off camera, obviously, but I'll throw in a couple of use cases there. And our first engagement with Canton was actually in the spring. I still remember getting on call with Eric and Masha. Right. Shout out to Masha, by the way, fellow Eastern European and Eastern European food lover as well. So I remember it was a very short call, but I think the two use cases that Eric gave me really resonated, and it's almost like one of those mythical light bulb moments where it's like, yes, we should be doing this. And it's really the privacy aspect of it, right? And I think you've touched on it already. But a very simple use case that I could think of is, and that Eric brought up, is imagine you wanted to pay your employees in stablecoin, right? It's a very, very simple use case. There's no way to do that today without everybody seeing how much everybody else is making, right? There's such a simple thing that you cannot achieve on the existing rails, right, pre-Canton. And the second portion, again, that's really exciting to us is the settlement. So again, Talos, powers interactions between institutions, and settlement by far is a bilateral activity, meaning that we trade with each other and then we have to settle with each other, right? There is no concept of a centralized clearing DTCC like as you would in TradFi markets. So those settlement transfers, again, are currently very public. And if you really wanted to, and I'm sure there's places that do this, you can actually gauge sort of the settlement flows between the various counterparties. And that information obviously is not something that you want out there, because that could allow interested parties to understand your trading volumes. They can gauge your revenues from that. They can understand what your trading strategies are based on the assets that you're settling as well. So a lot of that stuff that's public should really not be public, and is not public in TradFi markets. So again, I'm stealing a quote from Eric, but in this case, the transparency with blockchain is almost a bug and not a feature. And Canton addresses part of that.
Yeah, we all steal quotes from Eric. That's for and then what are your clients' views on Canton and their adoption patterns, to whatever extent you can talk about it?
Yeah, so largely across across two verticals again, and our super validator application really focused on two things, and that's unlocking the liquidity of the Canton coin itself, which again I'm happy to talk to, and the second piece, which is a longer term, that's the settlement aspect that I spoke about. So our institutional clients are hyper focused on both of those things, right? So our goal with the super validator application was to essentially say we will help grow the adoption of the network through increased liquidity of Canton coin, which we did support, through the listings process that happened 2 weeks ago on Perps, and then this week on Spot. And then going forward, and this is something we're piloting now with a couple of our clients, they absolutely have the appetite to move their public settlements into a private sort of chain. So I think both of those verticals are extremely interesting for our institutional clients. And I mentioned this before, but Talos is a purely institutional platform. We have over 200 plus clients, but these are blue chip names that are not, small mom and pop shops. We're dealing with some of the largest institutional clients in the world.
Yeah, and I think that sort of answers my next question, which is that how is Talos helping institutions to adopt Canton? They're what you're describing sounds like they're almost pulling, they're almost crying out for it, if that's not strong.
Yeah, definitely. So definitely on the liquidity front, it was, from our perspective, we were preparing for the listing, obviously taking, from a tech perspective, we were trying to get all our internal ducks in a row, making sure that we can support it once it goes live. We had no idea, obviously this is private information, on when the listings would actually happen. The funniest thing to me is that we've had inbounds from our clients asking us, when is this happening? Have you heard anything? So there was definitely sort of appetite and this pressure that was building up in our clients where they were expecting us to to list the coin as soon as it's available. And we are, again, I can't speak to the volumes obviously, but we've had the spot listing on Monday, and we've seen some very healthy volumes. I checked this morning. I was honestly surprised at how much our clients have traded.
Nice. That's and I suppose on my final question on a personal note. So how's it been? Behind the scenes supporting the go live of Canton Coin across exchanges.
Yeah, I mean, part of it is BAU. I mean, obviously Talos being sort of in the center of between all the various counterparties, like we are sort of used to this. But it was still kind of interesting because there was a specific deliverable that we had to meet as part of our super validator application. So I'll tell hopefully a funny story. Monday morning, we were sort of ready to go. We were monitoring when the exchanges would actually launch the network, and we were all prepared. We've obviously been preparing for this for a couple of weeks. And my CTO comes over to me and he's like, "We're ready?" I'm like, "Yes, we're ready." And he's like, "Okay, how long do we have after the coin launches to actually list it per our commitment as a super validator?" So I tell him it's 5. And he was like, "Okay, 5, we could do it." And then I say, it's 5 business days. That's what's in our application. And he just looks at me, he's like, 5 business days? I thought it was 5 minutes. So that just sort of shows you sort of the standard of Talos and what we're sort of the delivery at which we're used to operating. So he had this in his mind. He had this full understanding that we would support Canton within 5 minutes of launch. I'm happy to say that it was actually much quicker than that. I think as soon as it launched across 4 different exchanges, our clients were immediately able to trade it within less than a minute. So yeah.
There's one thing that you've touched on a couple of times and I haven't picked up on, but could you talk a little bit about what it means to be a super validator on Canton and what that means for Talos and how that works?
Yeah, so super validators, I think there's a lot of different paths to becoming super validator, and there's a lot of different values that each super validator brings, right? The Coinmetrics, which is the company that we acquired, they actually they brought their own super validator, so they were a super validator on Canton before acquisition, and they really deliver value through data. So they actually have released a Canton intelligent application over the summer. I'm not sure if it's a featured app or not, but they have been really essentially providing the value to the network in that way. For us, as again a trading shop primarily, the 2 verticals we're primarily exploring and through which we aim to provide the data is increased adoption of Canton Coin as a sort of liquidity and as a token, and then as I mentioned, facilitating a lot of those settlement activities that our clients are currently doing. We want to move them to Canton, right? And we want to work with our clients and build tools that they need for them to actually settle on Canton versus bilaterally as they do today. That's essentially, again, that's the main 2 ways in which Talos is looking to add value.
Anton, thank you very, very much for that. Real pleasure to have you here today. And the financial institutions, you probably know most of them already, and most of them are in touch with you already. But if there are people on the call who want to understand more about Talos, what's the best way to do that? Yeah,
so talos.com, very easy. Contact us in the top right corner. On Telegram as well, at Anton dash. So yeah, feel free to reach out.
Fantastic. Thank you, Anton.
Thanks for having me.
And Rajesh, now back to you.
Fantastic. Thanks, JD, and thanks again, Anton. It's really good to have had you on the webinar. A quick kind of infomercial from Launch Nodes in terms of what we're doing on the Canton network. If you're not aware of Launch Nodes, we are a profitable global node and applications business. We've been around almost coming up to kind of 6 years now. We are a Canton Foundation member, and we are approved to offer white label nodes and multi-tenant nodes to our customers. We've operated thousands of blockchain nodes globally for the past 5 years. And one of the things we've done from the outset is look at new ways of funding social impact through things like Ethereum staking. So we are working with Lido, we're working with Aave, and you can effectively lock your Ethereum and earn a yield, or lock your stable coins and earn a yield. And we've partnered with, or we're working with UNHCR, UNICEF, Give Directly, Mercy Corps Ventures, some of the leading global NGOs, governments, to help drive social change at scale. And so anyone interested in contacting us about that, we're always very interested in talking. A lot of people are aware of all validator nodes on Canton, and those validators are there verifying transactions, writing them to the ledger. But a lot of people aren't necessarily so aware of this second option, which are multi-tenant nodes. And I'd like to talk a little bit about that in a second. So really, as launch nodes on Canton, we do three things. We provide full validation nodes for customers. So if you want to have a Talos node, say, we don't operate nodes with Talos, but any entity, we can run a full node for you. Equally, we can give you space on one of our nodes as a multi-tenant. And then thirdly, we have a pretty unique labs concept where we build Canton apps quickly, efficiently, and can deploy them to mainnet in a very condensed timeline. So we've got great YAML developers, we've built apps ourselves, and that's increasingly becoming a larger part of our business. So going back to multi-tenant versus full node, I think most people think the full node is absolutely what they have to be on the Canton network and to participate in it. And Canton a while ago thought, let's actually have a simpler version where people can not have to run a full node, which is costly, and you've got to keep it running 24/7 and manage it and do version control. Why not allow people to share a node and split the costs and still maintain that security and still have people siloed from a data and applications perspective? So we kind of embraced that model as well. And right now, some people will be aware that you can't actually go live with a mainnet node, a full validator node, because there's a cap in place. Digital Asset told us yesterday that there is no timeline for that situation changing, unfortunately. I'm sure it will change at some point soon. Canton Network is very keen to get more and more participants on board, and there are a lot of applications which will require full nodes. But in the meantime, if you want to earn Canton Coin rewards, or you want to participate in the network and use applications, multi-tenant is a great alternative to that. And you don't get the full rewards that you would with a full node, but you do get a large proportion of those rewards. And also, come January, the validator rewards diminish somewhat, so you get closer to parity. There won't be such a big difference between running a full node and a multi-tenant node. So as I say, multi-tenant is available now. We're signing up customers on a daily basis at the moment, which is great. And the application rewards are pretty healthy. So all of our customers really are more than covering their costs with us through the application rewards. When would you want to have a full node? In particular, if you have written your own application that you want to go live with. Some folks are saying to us, can we have a multi-tenant node as a stepping stone? And when full nodes are available, we'll switch to that. And that's absolutely a kind of roadmap that we'll work with customers on. But the reason for that is if you've got an application and you need to connect to weather stations or sports data feeds or other things, you don't really want to be doing that on a box that you're sharing with other people, because you want full control over every aspect. So again, the rewards picture and the ROI around both of these models is changeable and very changing all the time. But in general, we're finding that customers are having a great time running and participating on the Canton network from an ROI perspective. We're a safe pair of hands, essentially, and we're very much back in Canton and believe in its future. It's a phenomenal network, and the ecosystem is great as well. One of the questions we get a lot is, how can running a node be so lucrative? Where are all the coins coming from? If we run a node, I don't understand what we have to do to run a node. There are lots and lots of questions about the economics of Canton, and people are asking us, is it a magic money tree? Where CC Boost, for example, how can they give you twice as much money that you send to them? So what we wanted to do was give you a really simple perspective on how Canton economics work. And this may work or it may not. This is the first time we're trying it. But essentially, if you imagine 10 years ago, five gentlemen got together and thought, we're going to build the best fun fair that's ever existed. There have been other fun fairs, and the investors got in early and they made a lot of money, and they left, and the fun fair went to rack and ruin over time. We want a fun fair where users are attracted to the venue, there's lots to do, and everyone gets rewarded for playing their parts. And those five guys realized that there are different types of people that you need to involve and engage and reward. And some of those are the builders, so the guys laying the pipe work and the electric cables and putting in wastage pipes and everything else, through to the helpers, the guys providing security and ticketing and first aid, through to the rides. So no one's going to come to your fairground if there isn't a carousel and a Ferris wheel and a water slide. So making sure that there are good rides there as well is pretty crucial. And no fun fair is going to survive if there aren't visitors. So making sure that the visitors want to come and are incentivized to come is also pretty useful. And they decided to create a magical coin that they were going to use to reward all these people. And that's the precise analogy to the Canton network. So super validators, and Anton touched on this, are essentially the builders of the network, big infrastructure plays, integrations, bridges, making sure that the core network itself is there and available, and all of the kind of plumbing and infrastructure is in place. Then you can be a validator and you can run your own node, and those nodes perform a useful function as well. And they're equivalent to the helpers who are providing the first aid and everything else. They make the fun fair run day to day. And then the apps in this model are equivalent to rides. So if you come along and you decide you're going to build the best Ferris wheel in the world, then you should be rewarded for doing that because you're bringing visitors to the fun fair. And if you're a user, you're a visitor, again, you want to get some benefit out of the fun fair as well. So this is kind of how we conceptually see the Canton world. We're not saying it's a game or a light-hearted thing, but actually, this is the model that it's very simple for our teams to kind of understand and explain. And it's very different to how other blockchains operate, where generally it's the infrastructure guys who get paid. And this is the crucial bit as well. And there's been a lot of confusion this week about, is there a supply cap on Canton Coin? There's talk about Canton Coin will only ever have 100 billion Canton Coin minted, which is true, but it's not like Bitcoin where you have 21 million coins and that's it. There's a kind of equilibrium process, the burn mint equilibrium, which happens. And that essentially means that somewhere on this fairground, there's a machine which every time you take a ride and you have a token for taking that ride, it gets burnt by this burn and mint machine. But at the same time, every 10 minutes, new tokens are being printed and are available. And if the fun fair's in use and it's a hot sunny day and everyone piles into the fun fair, those tokens are going to be in high demand and their value is going to increase. But at the same time, if it's a rainy, cold winter day and no one's at the fun fair, the tokens, the value of the tokens falls significantly because no one's using the rides. So making sure that use and appeal are kind of balanced out is the job of this burn and mint machine, and causing network health, bringing about network health essentially. So that, in essence, is a very whistle-stop tour of how Canton does tokenomics. And just to kind of bring it back to the picture of other layer ones, if you operate on the Ethereum blockchain, virtually all of the rewards go to the folks who provide the validators. So if you write an application, and Eric's used the example of Aave before, if you write some of the most successful applications on Ethereum or on Solana that exist, the only way you can get rewarded up front or through the process is typically through grants, which are hard to come by, that a bunch of guys sit in a room and decide whether an idea is good or not. Whereas Canton makes it much more democratic, because they're effectively saying, yes, people who provide the plumbing and the lights and everything else need to be rewarded, but actually a lot of the utility comes from the apps. So we want to disproportionately award app builders rewards, basically, which is where if you run a node and you run a whole bunch of apps and make those available, then you can earn decent rewards on the Canton network. So again, apologies for the very simplistic analogy for Canton tokenomics, but hopefully it kind of helps explain the differences between Canton and other things. There are a whole raft of great resources. I'm not going to drill into them. I'm just going to flash them on screen. The Canton Foundation's website has been revamped. It looks great. Go and have a look at that. Canton Network. There are some great podcasts around at the moment, including Melvis's podcast, State of the Ecosystem, and some with founders of Digital Asset, Don Wilson, Yuval, and others. So by all means, go check those out. And if you're a builder or you want to know more about smart contracts and DAML code, which is the language JD mentioned earlier, there are some great hackathons, ideathons, other things happening with some real prizes. So prize pool of around $20,000 for this next phase. So again, you can find all this stuff online on the social channels and on the websites. One final plug from us. I know a lot of people in our community are going to DevConnect this weekend or beyond. We are co-hosting an event with Sensei Node talking about Canton. So it's kind of Canton side event. It's at the Polo House in Buenos Aires. I think this weekend. We can give you more details on that. So if you are going and you'd like to meet some folks from Digital Asset, I believe that Jacob, who runs partnerships at Digital Asset, is going to be leading a panel there. Reach out to us and we can give you the Luma link, and we'd love to see you there. I think that's largely it, other than questions. We've got about 15 minutes for questions if people have any. I'm just going to open the chat. Before the first question we had right at the start of the call, a lot of people will have missed it, is what is Kantara? Do you want to take that, JD, or do you want me to pick that up?
No, I'm happy to take that. So Kantara is software that makes it easy for validators to subscribe to applications. So the model that Rajesh sort of explained in the tokenomics piece plays out whereby you, as a multi-tenant node or as a full validator, can subscribe to applications. But when I subscribe to Netflix, I pay them some money and I get movies. I don't get 400 Netflix coin back. But as Rajesh explained, the tokenomics model is that the user and the application are rewarded. And so your ability to subscribe to these applications is a function of how much you earn. So Kantara makes it easy to subscribe to these applications as a full validator and as a multi-tenant validator. And so you will be essentially subscribing to the application, you pay your subscription fee, and then they will produce an offer for you, which you accept, and then you're A-OK to use that application, and your node, in whichever form, starts earning rewards.
And then a question from Nicholas around what's the benefit of having more validators running their app? Do you want to take that as well, JD?
Yeah, happy to. So if you've got more validators running your application, you're going, again, back to Rajesh's analogy, you're creating utility on the network, more useful transactions. So the benefit isn't necessarily for the app developer, it's for the application that's been built. If it has more validators running it, then it has more people accessing it, and therefore more economic returns for that application.
Feel free, if you've got any other questions, drop them in the chat. In the meantime, Jay, you were on the tokenomics call this week.
did risk management on their long short portfolio, and then moved to high frequency trading at DRW Trading in Chicago, and was very fortunate to also start their venture team around the time that DRW entered crypto markets, creating Cumberland Mining, which is today one of the leading OTC market makers in crypto, and they've also built a lot of companies in the crypto space. And my co-founder was actually the guy who helped start Cumberland. So, I was very fortunate to be there at the same time. And then in 2014, both Eric and myself left DRW to start Digital Asset. And we met Shaul Kfir, who's the third co-founder, who was on the research team in the Technion that developed zero knowledge proofs.
Excellent. I want to dive more into digital asset here in a minute, but to kind of get an idea, like the underlying foundation for it, I know that it's kind of powered by the Canton network. Can you tell us a little bit about what maybe makes that a unique network in comparison to others, maybe across the Web3 space?
When we started the company, as people that have looked into Bitcoin and participated in Bitcoin very early on, Bitcoin to us was and still is a very novel asset class, but the idea of smart contract chains, where, in our opinion, how do you actually create the next set of financial rails? And financial rails for us was, to move assets that have real world utility. People today would call these things RWAs. Back then we didn't. The reason for the name digital asset, which in 2014 you could have bought digitalasset.com fairly cheap, was that every asset, every thing with utility eventually would become a digital asset and would be represented on blockchain rails. So that was the original thesis, and really for us, very different than some of the public permissionless L1s out there. We felt that privacy on chain, horizontal scalability while still maintaining the user experience of an L1 were all kind of like must-haves before you kind of like can say you have an L1 that can process at scale real world assets. And that's just kind of like the background of digital asset and kind of the story behind Canton.
Gotcha. And digital asset, the name is self-explanatory, but in your guys' minds, is there like a core mission that you guys kind of want to achieve with it?
Sure. So really our core mission is to make Canton the number one L1 smart contract chain in the world, and to really drive real world assets into the network. We can talk in more detail about what is already happening. But again, from our perspective, and this is not necessarily any kind of personal opinion about is it good or bad, but like we believe that one of the reasons why a lot of these chains move, very heavily with, the markets, or effectively have like a very high correlation with markets, is because they don't actually drive real world utility. So in the sense that like if you could actually, so for example, meme coin trading and all of those type of activities, generally speaking, will have a very high exposure to the market. So if the market is down, usually gambling is down faster, right? People have less money, they become more risk averse and those things. And in our view is when you actually look at, collateral management, payments, those type of activities, when the market goes down, those markets are still processing a very large number of transactions. And our goal, our mission is to be able to bring these type of businesses to run natively on chain.
And tell me about the network too. What are you seeing kind of crop up in the ecosystem in terms of what's being developed? Like, are these applications around infrastructure, DeFi, governance? Like, is there kind of a theme?
Yeah. So I think that, again, if I go back to our thesis, if in order to drive large scale enterprise type of applications, to us, privacy was a must have. And we announced our partnership with Circle in January, and really the main objective there is the ability to actually have the same performance, 24/7, very cheap, all over the world, stablecoin payments, but now with privacy. And I think that if you think about it from maybe retail using stablecoins in crypto, they're willing to accept that. Even some big players that are moving it. But now that the crypto market is becoming bigger and bigger, and stablecoins are clearly, especially with the IPO of Circle, are more and more in the spotlight. I don't see, and I'm just going to make up, I don't see a Fortune 100 company doing all of their payments with the whole world being able to see it. So one of our big focus and one of the things that we're seeing is, stable coins really getting excited about the ability to use Canton to actually do payments with privacy. There's payment companies that use stable coins for their ability to send payments. And currently, in order to have privacy, what they do is they commingle the accounts together in order to obfuscate the activity. You can imagine that that's something that they prefer not doing because it has a lot of operational risks associated with it. So if they can actually have all the accounts separated but still have privacy, that's a big deal for them. There's a lot of opportunity also now with the Genius Act in the US that now stablecoins will become legal tender to use it for collateral. So we know like exchange it or clearinghouses have this thing called variation margin, which is a lot of money movements. And now with exchanges wanting to move to 24/7, that's a big opportunity. So that's just one aspect. And the other is really just collateral, generally speaking. And interestingly enough, the uptake in Canton is from crypto companies that are actually saying, hey, now we're large institutional players. When we move assets, those are large sizes. And because of the lack of privacy on public permissionless chains, we get front run. People actually monitor our wallets and we get front run. So one of the interesting things is that a lot of the uptake is also from crypto players that are not only going to use things like stable coins or other real world assets, they're also asking us to wrap crypto assets into Canton and to be able to move crypto assets with privacy. So for example, if you will wrap Bitcoin into Canton, you could actually now move Bitcoin without the whole world seeing that you've moved it.
No, it's great that you guys are working on all this stuff. It's kind of weird because we're in this like stable coin summer, trying to find a coined term for it here, where you have the Genius Act likely getting passed and signed into legislation, into law. You have institutions like JP Morgan, Bank of America working on their own stable coins. You have so much kind of going on here behind the scenes with it. And there's a lot of interest in yield bearing opportunities and yield generation on stable coins. It kind of has taken the market by storm as of lately. Any thoughts on maybe what's kind of driving some of that interest, maybe from an institutional side?
Yeah, I mean, listen, I think that just payments, generally speaking, over the last few years have been a very hot opportunity. And I just don't think that there's anything different. I think that to me, with the Genius Act coming together, you have something that we haven't had before, which is now, again, a stable coin could be viewed, or is going to be legal tender, which is a game changer. Because until now, it wasn't. And again, if you think about as a crypto participant, you're willing to accept that risk. If you are, again, like a Fortune 100 company, you might say like, yeah, I'm willing maybe to take some risk, but I'm not willing to kind of like in a wholesale manner move
invested $4.19 billion into Web3 startups.
Last few years, the main driver for VCs was AI. Stablecoins, this is like unbelievable opportunity that started emerging in the space.
Now we come to such important discussion of the intersection of institutional and venture capital in Web3, in digital assets and blockchain. But first, let's start with a brief introduction of our speakers. So let's start with Lemon.
Morning, I'm Lamon Rutten, Exchange One, new exchange. Focus areas are Europe, UAE, and India.
Good morning, guys. I'm Saul Ridron, managing partner in Master KVC. We're early stage fund focused on deep tech cryptography. So our thesis is quite simple. We invest in innovative cryptography that we can scale fast within the Web3, which is a little bit more complicated to understand. But if your guys have real use cases or things that actually aren't possible to do in traditional finance, but is possible due to cryptography or to Web3, that's where we shine.
Hi, I'm Charles, the founder of Caprioli Investments. We run the Caprioli Fund, systematic macro fund, been trading crypto for 6 years, working with investors around the world, 60% plus CAGR over that period. We also run Caprioli Charts and Analytics, an AI-powered platform for navigating the markets. And some of you may know me as the founder of Hash Ribbons and other macro metrics.
Hi, my name is Hein Tibos. I'm head of product and OTC at Flow Traders. We're a global liquidity provider, both in the traditional space as in digital asset space. We started trading digital assets in 2017 when it was a very novel and upcoming market. Currently, we've seen it really mature, and so did we. So right now, we have a full end-to-end offering, mostly based around providing liquidity in digital assets.
Hi there, I'm Henson Orser, and I'm founder and CEO of Soter Insure, an insurance company that we launched in March of 24 and went operational this year. We're backed by Further Ventures here in Abu Dhabi, as well as WebN and Brevin Howard. And our first funding round was done by Galaxy Digital in New York. Prior to founding Soter Insure, I was the first CEO of VARA, the Virtual Asset Regulatory Authority down the road in Dubai, where I helped launch that in 2023. Before that, I ran a crypto custodian called Komainu, which we spun out of Nomura Securities when I was a senior executive there in partnership with CoinShares and Ledger.
Thank you. And my name is Sana Tutava. I'm founder of AI Crypto Minds. It's a PR marketing agency and advisory. So we help projects, companies, experts with the promotion, getting them featured in top media like Forbes, Bloomberg, Entrepreneur, CoinDesk, and so on. Additionally, I produce documentary films about Web3 adoption with top minds like CZ, founder of Binance, Vitalik Buterin, creator Ethereum, Palardino, CEO Teza, and many others. And as well, I'm advisor at the family office. We provide loan financing, collateralized in crypto and publicly traded stocks. So let's start with our conversation. And I would like first to touch the points on the venture capital investing. And if we check the data, we can see that in Q3 2025, they were invested $4.19 billion into Web3 startups. And 56% of those deals were for later stage financing for the crypto startups. But we haven't really, the market for altcoins really taken off. But for the later stage companies, it has been really booming. We see as well a lot of M&A deals, over 100 M&A deals, and some big, super big ones, right? Ripple acquiring Hidden Road for $1.25 billion. Stripe acquiring Bridge for over $1 billion, and so on. So we see a lot of traditional businesses and as well both large companies acquiring other companies, the same as Coinbase acquiring Deribit and so on. And additionally, we see another huge rounds for a lot of private equity financing rounds, like for Kraken. They raised over $500 million. We saw the news about Tether planning to raise $500 million at $20 billion valuation and so on.
Hey, chat, what's going on real quick? If you guys are new to these evening/afternoon streams, all we are doing is just sharing some of the panel discussions. There's literally thousands of them inside the Private CyberX Discord. The panel discussions from all the blockchain summits that are currently taking place or have taken place within the last few months. And we're streaming those for you guys directly. So if you guys are enjoying this, do me a favor, share this stream. We're going to roll off here soon. I'll probably play one or two more for you guys. If you all are feeling this one, after they do the introduction, let me know in a chat. If not, we can go ahead, we can switch it up. I have one more that I wanted to share with you guys today. This one was on my radar as the headline title looked relatively interesting. It says Institutional and Venture Perspectives in the Digital Asset Space for 2026. So we'll see what this one entails. We'll give it maybe like 10 minutes into the or after the intro to see if anything juicy comes about. And we're going to continue to do these live streams in the afternoons for you guys when we have time, sharing some of the research inside the Private CyberX Discord. So blessings to you guys for tapping in with us. Let's jump back in, give this one another 10 minutes. If anything juicy happens, I have my notepad out. I'm writing things down as they come out. If nothing juicy in the next 10 minutes comes out, then we're going to go ahead and we're going to transition into another panel that I want to get into with you guys today.
So the industry in that stage is really booming, but for the early stage investing, it's a bit tricky and different. So I would like first to ask Saul. So there basically we haven't really seen the altcoin season and this cycle. So how are you changing your investing approach in the current institutionally focused environment?
Thank you for the question. Actually, it's pretty aligned with what we do in MasterKey. So we don't usually do trading and we don't do alts. What we do look for is real use cases. And what we actually see these days is like the maturity of the ecosystem. And it's also important to understand like few different forces that affecting general VC and thesis. So it's like in the last few years, the main driver for VCs was AI, right? We've all been there. We all saw that a lot of startups in different segments just outside of crypto and Web3 didn't survive. So like they literally came out like zero dry powder. So like they don't get investing, they don't get funding. What we do see in our space, different forces that are affecting. And M&As are just a side effect. Stable coins, this is like unbelievable opportunity that started emerging in the space. Started it with Tether in 2015, I think. And what we've seen based on the Andreessen Horowitz report, $45 trillion in settlements. Out of it, it's 9 trillion for payments. So it's not something that we can think that it's just a side thing. Stable coins are becoming a killer app, and these financial or like more fintech companies like Stripes and etc. and have to take steps. We also saw it in the last, like I'm based in Israel, and like what we've seen in the last 2 weeks, we saw 45 was acquired by Paxos. It's the third Israeli acquisition for custodial solutions. When you're looking on the territory, deep tech, MPC, Coinbase acquired Unbound Security. That is like basically the MPC engine that secures the ETF and the custodian for Coinbase. PayPal acquired Curve. Galaxy acquired GK8. And you're probably most likely using Fireblocks if you're institutional. These are all Israeli companies now. 45 was acquired. We also see that stocks on chains are becoming a massive opportunity. And it's not just because you can do 24/7 trading. It's also because of DeFi applications that just not exist for real retail users that invest in stocks. Now they're capable to do it. And Beck.Finance was acquired by Kraken recently. So what we see is basically consolidation for real use cases, for the real market money makers, which are pretty aligned with our thesis. It means that alts are not going to be there. Don't get me wrong. Alts will continue. Alts will shine. Alts will start trading at $5 billion valuation from day one. I'm not really sure. So like when you see that VCs are pumping prices, taking tokens to the public, I'm not a fan of that model. I'm much faner, like I believe in the models of Echo that was also acquired by Coinbase, and Legion, that basically bringing the community to take part from day one, from the get-go, and build the project together. And that's the way that also early backers can make profit.
Honestly, Chad, I'm thinking that this one's going to be a dry one. It's already 10 minutes into the podcast or the panel, and we haven't heard anything worth writing down yet. So I'm going to go ahead. I'm going to switch it up. I have one more that I'm going to play for you guys. It is an interview. It was an interview that Milk Road just dropped roughly about 2 hours ago. And we have Zach Prince, the former BlockFi CEO, now head of Galaxy One, unpacking what's actually happening in the scenes in the crypto space and why 2026 may look nothing like past cycles. So let's dive into this one real quick, because the one that we're currently listening to is honestly boring me to death. So I know that it's probably doing the same for you guys. So let's lock in.
Been a leader in the institutional crypto lending market for a long time. The institutional crypto lending market is undersupplied with cash relative to traditional markets. And as a result, the cost of borrowing is higher. And we are, with this product, enabling folks to access that market with a security wrapper of a guarantee from Galaxy behind the product.
The biggest players in finance are in a race to build the latest and greatest everything app. But what does this mean for users, investors, and what makes all of these apps unique? Or are they all just different flavors of the same thing? Hello and welcome to the Milk Road Show, the daily crypto show that knows that the best app in crypto will always be number go up technology. I'm your host, John Gillen. It is Tuesday, January 6th, and today we are joined by Zach Prince. Zach is best known as the co-founder and former CEO of BlockFi. He is now back in crypto as the head of Galaxy One, Galaxy Digital's consumer-focused platform offering high-yield cash accounts, crypto trading, and stock brokerage services, and maybe a whole lot more than that soon. Zach is going to give us the inside scoop on one of the biggest newcomers to the crypto app competition, and a whole lot more besides that. So make sure you like and subscribe. Share this episode with someone who needs to hear it. Today's episode is brought to you by Reserved ETFs, the on-chain equivalent of ETFs in crypto, because the BlockFi situation was what it was. I think you guys handled that as well you could under the circumstances with what happened with FTX. But you are somebody who has been in crypto for a very long time, and I'm really curious your thoughts on where we are in the market right now. Bitcoin is finally showing some signs of life here in early 2026 after surprisingly weak performance in 2025. Is this just a dead cat bounce on the way into another long bear market, or do you expect Bitcoin to show some strength and make new highs in 2026?
Yeah, I could, honestly, I've never been much of a short-term market prognosticator. I defer to Mike Novogratz and others within Galaxy for, price predictions and things of that sort. But, from when I first started investing in Bitcoin, which was back in 2015, I've thought that it was something that is a store of value mixed with a kind of venture capital-esque type of bet. And I still think it serves that purpose. I think there's tremendous tailwinds behind the asset class with ETFs and other kind of traditional financial services platforms having products now that they can sell to investors to give them exposure to the asset class. I think demographics are in the asset class's favor. And I think we're going to continue to see increased use of blockchain technology into different applications that will ultimately pull capital into the ecosystem. The times where I have tried to guess where the Bitcoin price is going to go, I'm often wrong. I don't make investment decisions based on how I feel about where the price might go. I'm more of a, come up with an asset allocation, set it and forget it type of guy. That being said, the market felt pretty bearish at the end of last year. It should have been a great year for Bitcoin. Gold, silver, stocks were all, had a great year. And Bitcoin was down on the year, I think a little bit, right? Like down 10%-ish on the year, which is not what you would expect. Twitter sentiment, I'm a huge, X Twitter user. I read it probably too many hours of every day. Felt very bearish. You had some people rage quitting. And anytime you start to see that sentiment, the pattern matching that I've seen in my years in the industry and as an investor in the asset class, is that it could be the beginning of a signal that it's about to rip. And is there going to be a reason that it rips? I don't know. Sometimes there's a catalyst. Sometimes there's not a catalyst. It's just, it's time for Bitcoin to start moving and other cryptos to follow. So look, we'll see. My view is that, everyone that manages liquid investments for theirself or an institution would be wise to have an allocation. I think it does a wonderful thing to portfolios, and I'm long-term very bullish on Bitcoin in the asset class.
Hey, if you're a product leader and an investor, Milk Road wants to talk to you. We're hiring a head of product to build tools.
Galaxy One, and particularly your career, has been much more retail focused. So what do you think about this growing gulf between retail sentiment, like you said, being terrible on crypto Twitter and other places, but the institutional adoption getting stronger and the fundamentals getting stronger? What do we need to see happen to sort of reignite some of that retail interest in digital assets and bring back some of that enthusiasm?
I mean, look, it could be any number of things, right? It could be something as simple as bonus season actually rolling around in the next few weeks, and people allocating some of their bonuses into the crypto sector, Bitcoin crossing 100K again. And then all of a sudden it's, in vogue and people are excited and the animal spirits are flowing. But you're also going to continue to see announcements this year similar to what we had last year with the ETFs on the institutional side. Like Morgan Stanley this morning just announced they're launching a Bitcoin ETF and probably some other crypto ETFs. And so I think that'll be a big story for this year. The traditional financial institutions of the world continuing to productize and open up distribution channels for crypto that will then flow through to retail investors. Often cases, it'll be retail investors who have their investment decisions managed for them by an RIA or another investment professional. A lot of those channels are still closed. They move slowly. The ETFs just came around last year. Some wirehouses and other firms have a 1 year lockdown on new ETFs being able to be made available to their clients. And so we're going to see progress there. And ultimately, I wouldn't be surprised. I'd be more surprised if we have another bad year and less surprised if we have a good year that people aren't expecting with low sentiment at the beginning of the year.
Gotcha. Yeah. So it sounds like you're saying that the 4-year cycle is dead. But like you said, you're not a prognosticator, so I'm not going to twist your arm on that too much. But I really appreciate the outlook and just sort of your general thoughts on where we are in the market right now, because a lot of people are trying to figure out what's going on. I want to pivot the conversation more towards Galaxy One, because I do want to learn a lot about this platform while I have you on the program here. This has been billed as a unique, or a unified crypto platform built for institutions. And that's, I think, something that's been emphasized a lot, is this built for institutions piece. It was launched by Galaxy Digital in October of 2025. It allows investors to manage cash, trade crypto, and invest in traditional stocks and ETFs all in one place. And that's that unified piece. Just tell us about this. What got you excited to come back to crypto with Galaxy One? Why are you passionate about this specific project?
Sure. So, what got me to come back, I've had a long relationship with Mike and Chris Ferraro at Galaxy. They were early investors in BlockFi. Chris was on the board at BlockFi through our Series B. And so we've had a great relationship for a long time. I respect them tremendously as, incredible capital allocators, incredible thought leaders. And, I was very excited about the potential to join the team, but also I was very bullish on the space that Galaxy operates in, which I would categorize as being, when I joined, institutional crypto financial services, and then obviously their expansion into AI data centers. I think it's a pretty unique company to have both of those things under one roof. And I think over a long enough time horizon, you'll see some interesting intersections there that Galaxy is able to take advantage of in ways that, other companies might not be as well positioned to. And the idea for Galaxy One, which Mike and Chris had, basically a simple idea, which was, should we bring some of this institutional infrastructure and services that Galaxy has built to individual investors? That idea was something that excited me tremendously. And to do it not just for crypto, but also, across other asset classes, and in a way that was really focused on enabling folks to grow their wealth with differentiated products that Galaxy is uniquely suited to offer because of its infrastructure and expertise that it's built up, of course, in traditional finance with the backgrounds of everyone before joining Galaxy, but then specifically in crypto. And so we launched in October, checking account with FDIC insurance, brokerage account where you can buy and sell stocks with no fees, crypto account where you can buy and sell blue chip cryptos, and then our Galaxy Premium Yield product where you can earn 8% on cash if you're an accredited investor. And this is just the start of what we're going to bring to the market on this platform. But ultimately, I think if you look at us a year or two from now, you'll say, wow, there's like 3 or 4 things that Galaxy One is doing that I cannot do at Coinbase or Robinhood or some of the other, traditional consumer financial services companies. And there'll be things that, you're either accessing capital at a lower cost when you're borrowing, or accessing investment opportunities that offer higher returns, or kind of a different, better risk-adjusted return profile than traditional allocations. And I love this stuff, this is building consumer financial services is a passion of mine. I'm kind of like a personal finance nerd, and I also love crypto. And so having the Galaxy platform as a place to build something like that, and doing it with a publicly traded company, which is something I haven't done before. BlockFi was obviously, private throughout its entire life, was another thing that really interested me. So I couldn't be more excited to be here and be a part of this team.
Well, I want to say one thing just to plug Milk Road AI. Mike Novogratz from Galaxy Digital came on to kick off that channel that we launched. If anybody missed that interview about that intersection of AI and crypto that Zach mentioned, definitely go check that out. But I want to ask some more questions here, specifically around some of these products and features, services that you said that Galaxy One is going to have that'll be unique differentiators. One of the things I've seen is you guys are offering FDIC insured cash accounts yielding up to 4%. And a premium yield product up to 8% APY for accredited investors. My understanding that this is going to be backed by Galaxy's institutional lending, but not FDIC insured, that premium product. I'd love to hear more about that. And this is like the classic crypto question. Where exactly is that yield coming from? Tell us about this product and what's going on there.
Yeah, sure thing. So one thing to note, for both of these products, the FDIC insured checking account and the 8% premium yield for accredited investors, you can auto reinvest the interest that you're earning into the crypto of your choice, and soon, to give you a little bit of a glimpse into the roadmap, also into any stock or ETF of your choice. So this idea of compounding wealth over time, comes through in these products already. Differentiate.
Wow. Are you guys hearing this right now? This is crazy. This dude's confirming that these high net worth individuals or accredited investors can tap into 8% yield, compound that daily into their favorite digital asset. This is massive confirmation that if you're involved in DeFi right now and you're already generating yield and then compounding that daily, you're on par with what some of these individuals are offering to these larger investors. That was a huge confirmation. I'm happy that we stuck around for that one. I wrote that note down right there. That was a good little tiny timestamp. I'm going to run that back real quick.
Love to hear more about that. And, this is like the classic crypto question. Where exactly is that yield coming from? Tell us about this product and what's going on there.
Yeah, sure thing. So one thing to note, for both of these products, the FDIC insured checking account and the 8% premium yield for accredited investors, you can auto reinvest the interest that you're earning into the crypto of your choice, and soon, to give you a little bit of a glimpse into the roadmap, also into any stock or ETF of your choice. So this idea of compounding wealth over time, comes through in these products already. Differentiated products, I think Galaxy Premium Yield to 8%. There's just not a lot of places where you can get a short duration, publicly traded company issued private security where it's just a very attractive yield on cash for someone that has a short-term cash position for whatever reason, or is a fixed income type investor. I think this product is worth taking a look at. Where does the yield come from? Really simple answer. Galaxy has been a leader in the institutional crypto lending market for a long time. The institutional crypto lending market is undersupplied with cash relative to traditional markets. And as a result, the cost of borrowing is higher. And we are, with this product, enabling folks to access that market with a security wrapper of a guarantee from Galaxy behind the product. So while the yield is being generated from institutional lending in the crypto markets, you have the protection of a guarantee from Galaxy, essentially making the risk profile something more like corporate debt. So if you're thinking about analyzing the risk, I think the right way to do that is by looking at Galaxy's health as a publicly traded company. They're publicly produced and audited financials, which isn't really something you've been able to do with any crypto lending product, yield generating product historically. One thing I would note, because of our focus on risk management, the product is capped at 250 million in total size for now. So at some point in the future, we will be saying that product is not available anymore potentially. But that's an important consideration for risk management, and it highlights how important risk management is to Galaxy. The institutional lending book, as of the last quarterly earnings report for Galaxy, was at about 1.8 billion. And so we basically sized this vehicle as a function of that. And we said, okay, if we want this vehicle to be just a portion, we don't want all of the institutional lending to be funded by this, but we want to give investors on the Galaxy One platform access to it. We put that cap on it. That's also important for risk management. We couldn't generate 8% in the crypto lending market on $10 billion of cash. So there is a little bit of like a while supplies last component to this vehicle, but there's plenty of room for now.
Yeah, I remember what it was like back in 2021 and 2022 when everyone was promising, the 16% APY on however many billions they could get. Yeah, exactly. So it's good to hear that that's not what's going on. I think that like the framing of that with the limit on the offering for the product is a good way to frame it. You're going to have dollars waiting in line to get access to that, and that's a good place to be. Like we've discussed in this conversation already, Galaxy traditionally has been very focused on institutions. This product, as you say, is for individuals, retail, but a lot of people have already observed that Coinbase, Robinhood, Binance, many others are already sort of serving the retail market. And I'd like to hear your thoughts on just what differentiates you from these people or these other competitors, other apps. Do you see them as competitors, or are they going for a different niche of the market? Like, tell us your thoughts on that.
Yeah, sure. We're open to everyone, but I think we're going to have products that are particularly interesting to folks that are in the kind of mass affluent or higher net worth category of retail. We think of that as being roughly the 20% of households in the US that meet the accredited investor definition, which is $200K a year of income or $1 million net worth, excluding your primary residence. And with our product suite now, Galaxy Premium Yield is only available to folks that are accredited investors. And so while we're open to everyone, that is kind of our express target market right now. And we think that audience has some, unique needs that aren't well suited by the Robinhoods and Coinbases of the world. So I would say those generally fall across two categories at a super high level. One is white glove customer service. Our client service team is based in the US. They're very smart individuals. They're often registered reps that have passed their Series 7 or 63 or other kind of securities-based certifications, and they're available over the phone, over chat, over email. And so a really high quality of customer service. And the second is that anyone who's been on Robinhood or Coinbase knows that they are throwing a lot of things at you. And for me, a lot of those things do not belong next to a serious like long-term kind of asset management, asset allocation, investment strategy. There are certain coins in the crypto market that I wouldn't recommend to, my worst enemy, not that I have one as an investment. There are, amounts of leverage or, things that happen with that are just a lot closer to gambling, I think, than investing. And so we're going to do less of those things and more of things that fit into the categories that I was talking about earlier, enabling folks to do tax efficient, low cost borrowing where it makes sense, to allocate their investment dollars into vehicles that are differentiated and allow them to compound and grow their wealth better than they can on other platforms. And I think we're going to do that in a way that is decluttered relative to what you see in some of the other kind of financial super apps today, with the backing, obviously, of Galaxy Digital and the product pipeline that comes from the institutional focus that Galaxy has had.
ETFs provide investors with a structured, disciplined, and diverse. Sure, tokenized financial products are the
service, and they want some of these things unbundled from the plethora of things that go in a normal everything app, and then to have those things that are in there be very premium quality, institutional backed, or institutional grade rather. So that's helpful just as to think about how you're framing this in your own mind. I want to pivot towards some questions about the roadmap and future products and services that might be on the docket here for Galaxy One, but I want to frame this in a sneaky way to see if I can get you to tip your hand on this. Coinbase and Robinhood have both publicly and successfully been pursuing their own L2s on Ethereum. A lot of other players in the space are doing L1s, launching their own stable coins. Have there been any conversations about doing either of those things, an L2, an L1, stable coins within Galaxy or Galaxy One? Or what are some of the items that are on your roadmap for 2026 and beyond?
Yeah. So, I mean, look, within Galaxy, it's an easy answer. Yes. Have we had conversations about it? I mean, there are just some incredible teams and areas of the business at Galaxy, as I think you probably know from having Mike on. We're one of the largest providers of blockchain staking validation services across a number of blockchain networks. We own and operate a custody platform with GK8. We have an asset management and investment banking and advisory arm where we're, helping companies facilitate investments or merger or acquisition transactions. We offer, private and publicly traded asset management vehicles. So are we looking at novel ways to take advantage of the brand and our position in the market directly, through blockchain infrastructure? Yes. Is that happening within the Galaxy One team? Not necessarily in a silo. There's a couple other teams within the firm that are more focused on those than are. We're really like the consumer-facing app layer. And so as those things get developed in other parts of the firm, will we look to bring the ones that are relevant to the audience that we have on the app in the right package? Absolutely. So, we'll be having a staking product and a borrowing product coming out on Galaxy One this year that I think will be differentiated relative to what consumers are able to access on other apps. We'll be adding support soon at Galaxy One for corporate accounts. And we think of this as really two categories of corporate accounts initially. Single member LLCs that are used for investment or wealth management and planning purposes. So think LLCs, trusts, foundations, and then also for crypto businesses that want to get access to a treasury management solution, open up a bank, brokerage, and crypto account with one simple onboarding. If you've ever had to onboard, I don't know where Milk Road does its treasury, but if you've ever had to try and open up a bank account and a brokerage account or a crypto account for a business, you realize that it can be really time consuming. For every single one of those, you're looking at, weeks to months for each type of account. We're going to enable folks to open all three of those accounts in one shot really quickly on our platform. We're going to be also launching a crypto portfolio line of credit product, which I'm really excited about. A couple other products in the borrowing category that we haven't talked about specifically yet, but in the back half of this year, you'll see us combining crypto with a traditional asset class for a very large borrowing market in a way that I don't think other platforms have done before. So yeah, borrowing, earning more on your assets, onboarding more account types with business are some of the big themes for Galaxy One for this year.
Gotcha. So what I'm hearing in this answer, and there was a ton of alpha in there that I'm going to have to rewatch this again and unpack each one of those things piece by piece. But it sounds like a lot of these products and services are focused on solutions for corporations, for companies that you're focusing on in 2026. Tell us about that market opportunity. What is the demand that you're seeing in the market that's underserved? And why do you think it's so important to focus on providing these solutions for businesses and corporations? Just tell us a bit about that.
Well, I think there's two parts. So, on the individual side, if you think about this type of client that we're trying to address, the mass affluent, higher net worth individual in the US, very often these are business owners, or they have, for wealth management purposes, separate entities. I mean, on the super simple end, you're talking about, just like an IRA that they've moved out of a 401k from an employer that they now kind of self-direct and can move around. And we already support those on our platform. But as you get into more advanced stuff, you think about an LLC if you're someone that invests in real estate, and your LLC might be sitting on some cash that you need to manage. Or if you're doing charitable donations, if you think about a donor advised fund to manage your charitable donations. If you're thinking about your family and how things are going to flow through once you're not here anymore, you've probably set up a trust. And so there's all these different vehicles that individuals use, which don't have a social security number. They have an EIN number. And as a result, we want to have the ability to onboard those seamlessly for our individual clients. And then the second category is crypto businesses that are looking for a consolidated banking, brokerage, and crypto treasury management solution. And, things have gotten better for crypto businesses, but it's still hard. Like if you go to a bank and say, you're filling out a form to try and just open up a bank account and you put anything on there about crypto, you're going to raise some compliance flags. You're going to go through some extra checks. We understand the crypto market very well. We already, support on the institutional side of Galaxy tons of crypto businesses with different types of solutions. And so bringing that to the app for smaller businesses that wouldn't necessarily qualify for a relationship with Galaxy's institutional side quite yet is something that we think is a big opportunity.
Thanks for explaining that. I think that makes a lot of sense and helps track why these products and services are going in that direction. I want to ask a couple questions about what you're anticipating for the future here, but I want to ask specifically around the Clarity Act. A lot of people are anticipating that once this bill comes through, which hopefully it will soon, it's on the docket in Congress right now, there's going to be sort of like a double-edged sword for crypto. On the one hand, there'll be a lot of opportunities, a lot of new capital that can potentially come into the space. On the other hand, there'll be challenges because a lot of legacy players will start to move in and launch their own products. How are you thinking about that in terms of the challenges and opportunities that come from the Clarity Act for Galaxy Digital, but specifically for Galaxy One?
Sure. So I think a lot of that really has to do with, market structure, what type of asset falls into what bucket, and what exchanges can facilitate the trading of those assets. And so I don't want to discount the value of the Clarity Act. I support it. I think it's going to be a great thing for crypto to have that clarity. I think it's an item in the bullish category for the asset class when it gets across the finish line. But for Galaxy One, we're kind of agnostic to that exchange layer. We're trying to be a platform where wherever something might be traded, whether it's in the traditional brokerage world or the crypto world, you're able to access it here. We're able to get you quality execution at a good price. And so I anticipate that it will, facilitate liquidity for the space. Increased competition in general is almost always a good thing for consumers. And so we welcome that. But it's not something that we've thought a lot about having, implications for our roadmap, because we're really a layer above that, creating services and access on top of the exchange mechanics.
Gotcha. Okay, that's helpful. I want to ask about 2026. There's a lot of big narratives that are out there right now. The intersection of crypto and AI is one that we've briefly touched on, but also stablecoin adoption, tokenization has gotten a lot of attention as well. What are some of the bigger meta trends that you think do benefit Galaxy One, or that you are really excited about going into 2026 here?
I would just say it's, despite all the doom and gloom news that we hear, if you open up, if you turn on the TV or read social media apps, like the wealth of the American consumer is doing really well. Demographic trends, I see a lot of stuff about how like younger people are getting screwed because older people are holding all the money. Well, the older people are going to pass away and pass the money down to younger people. So as that wealth transfer starts to happen, the preferences of younger folks are going to matter more. And I think they're much more familiar with, platforms like the one that we have at Galaxy One, where it's kind of an app first, multiple kind of products in one place, really intuitive user interface versus the traditional, you have to pick up a phone and call your broker or schedule a meeting with your financial advisor to get anything done. So I think those trends are in our favor. Obviously the interest rate cycle and the prospects of a new Fed chair and a dovish interest rate policy, I think are bullish for the borrowing products that we're planning to launch. and also for markets and the economy as a whole. So those are a few of the things that I would call out.
Stablecoins are the biggest use case in crypto right now, but let's be real, using them on chain is still way
All righty, team. That is all that we have time for in today's podcast. Just streaming some of the research that is shared in our crypto-specific crypto conference section in the CyberX research channel. Don't forget that if at any point in time you guys want to access this vast collection of non-mainstream research, CyberX is one of the most comprehensive research communities available to retail investors. If you're a crypto investor, active trader, or DeFi user, you will find a home inside our private community. The CyberX research team goes into the rabbit holes that most people don't even know exist. We've built one of the largest organized collections of documents, panel discussions. We have regulatory updates and institutional publications in the entire crypto space. And all of this is available at your fingertips. Non-mainstream research that you won't see on Twitter or YouTube, real-time macro and institutional market breakdowns, institutional grade technical analysis insights. We have 4 to 6 private Zoom calls every single week. There's hundreds of educational documents, the largest collection of esoteric books, awakening resources, and this are just some of the things waiting for you inside of CyberX. No hopium, no service level hype, and no recycled Twitter noise. So hopefully we see you guys on the inside. For those of you advocates that want real education, real insights in a community that is built for people ready to elevate financially, mentally, and spiritually. Many blessings to you guys. Be cognizant, be aware out there, and we will see you all in a later breakdown. Everybody take it easy. Many blessings.